Be Wealthy and Smart, episode 1386.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how stocks rebounded after Monday's sharp pullback. Yesterday's stocks jumped, recovering some of the losses from the previous 3 trading days, which were a result of recession fears and the Japanese carry trade. The S&P 500 was up 1.04%, the Nasdaq gained 1.03%, and the Dow rose 0.76%. All 11 sectors of the broad market index were positive for the day. And some of the big favorite mega-cap stocks rebounded nicely, like Nvidia up 3.8% and Meta up 3.9%. The Japanese index soared 10.2%, covering some of its losses from previous days, but not all. It had its worst loss since 1987, losing 12.4% on Monday. What was notable was the volatility index on Monday was the 3rd highest ever. And that indicates that volatility is likely not finished, nor is this correction. While economic indicators in the U.S. appear to be robust, the labor market is having some cooling, which is leading some to try to get the Federal Reserve to cut interest rates sooner than September. But so far, those requests have not been granted, and the Fed looks like it's still on track to make its first cut at the September 18th meeting. Whether that will be 0.25% or 0.5% is the question. Now, I mentioned on Monday's podcast the severity of the yen carry trade, which contributed to the volatility on Monday. The Bank of Japan last week raised interest rates, and that contributed to a rise in the yen, and that affects the price that traders have to pay to borrow money in Japan in cheaper currency to purchase other global assets. They borrow cheaply there and invest the money at a higher yield. But when the currency goes against them, they have to unwind the trade and get out of those losses. And that triggered a lot of selling in the large and mega cap tech stocks. Yesterday, the yen retreated following sharp spikes that added to the worries of the carry trade. But this could just be a temporary reprieve. Nonetheless, we know that these kinds of sell-offs and corrections are normal in markets, and that 94% of the years since 1928, the stock market has had a pullback of at least 5%. And on average, stocks experience a pullback of over 5% over 3 times a year, and a correction of 10% or more around once a year, even in positive years. Now, although stocks rebounded on Tuesday, typically called Turnaround Tuesday, when Monday's down, Tuesday's usually up, and that's exactly what we got with a relief rally yesterday. But it's just too early to tell if it's only a relief rally or if we have lower to go. In my opinion, we do have lower to go over this month of August. Mostly the stock market operates on corporate earnings, and earnings in the first half of the year were very strong. And a lot of spending was up due to excitement about artificial intelligence. But since that time, the excitement has waned a little bit, and we're in the pause period now, where companies typically pause after making those AI investments and say, has it boosted our returns? Has it increased our profits? And we've yet to see that occur in companies. And it's normal to see that on the technology curve. This time period of frustration where you've spent the money, you've invested in AI or the technology of the day, and you've yet to see the results. And that's kind of where we are right now. So I do think we're in kind of a rock and a hard place between disappointing corporate earnings on some of the mega cap stocks, as well as worries about the economy and the recession. Inflation, interestingly, doesn't seem to be a problem at all. Inflation seems to be dropping nicely. And future reports on inflation should reflect that. So I don't think the Fed is going to have any problem lowering rates in September. The only problem is they can't really do it sooner because it would make the yen carry trade worse. So what's needed is time to unwind those positions and maybe a credit line so that positions don't have to be sold at a loss. We'll see how this all plays out over time, but I don't think it's the last we've heard about the yen carry trade. And we'll see more volatility from that in the coming weeks. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.